Welcome to the deep dive. Today we're looking at a really interesting collision of sectors, healthcare and crypto specifically. You actually flagged a fascinating development for us, this merger between a healthcare provider, KindlyMD, and Nakamoto Holdings. That's the Bitcoin holding company founded by David Bailey, who advises Donald Trump on crypto. So our mission in this deep dive is really to get into the nitty-gritty of this merger, kind of figure out what's driving it, and see how it fits into the bigger picture of Bitcoin adoption by public companies.
It's definitely an unusual combination, isn't it? What immediately struck me was how the market reacted. KindlyMD's stock price, well, it saw a pretty significant jump right after the shareholders approved it. We're talking about a 5% increase basically straight away after that decision, and that's on top of an already, frankly, amazing 979% rise year to date.
Wow, 979%.
Yeah, and it didn't actually stop there either. It gained another 4.8% after hours, closing at $15.22 back on May 20th. This kind of movement, it suggests investors are seeing some real potential here.
Or maybe just reacting to the Bitcoin buzz.
Could be. Or perhaps they anticipate, new ways for financial innovation within healthcare, or maybe just a way for KindlyMD to leverage Bitcoin's, its growing acceptance.
That's an incredible jump, and it really highlights the potential impact just associating with Bitcoin can have on a company's value, right? Even if the direct link isn't totally clear yet.
Yeah.
Okay, so drilling down into the specifics, what exactly does this merger involve?
Well, in essence, KindlyMD shareholders gave the green light for the merger with Nakamoto Holdings. And like you said, this is a brand new company specifically set up to develop a network of businesses all centered around Bitcoin. So the next step is both KindlyMD and Nakamoto Holdings will be filing these information statements with the SEC.
Right, the SEC filings. And what's the sort of timeline for this? When might the deal actually be done?
The current expectation, based on what they've said publicly, is that the merger should be finalized roughly 20 days after both companies get those SEC filings out to your KindlyMD shareholders.
Okay, 20 days after.
Yeah, they're aiming for completion sometime in the third quarter of 2025. So, still some regulatory steps to go through.
Q3 25. Got it. Interesting. So this new entity, Nakamoto Holdings, what's their actual strategy? What are they planning to do with Bitcoin?
Yeah, what's interesting is their stated strategy. They intend to actively develop what they're calling Bitcoin native companies.
Bitcoin native countries.
Basically, yeah. Businesses whose core operations or, services are built around or directly use the Bitcoin network and its capabilities. And to fund this growth, they're looking at various financial tools, issuing equity, debt, maybe other types of offerings. And crucially, they also plan to build up their own Bitcoin reserves, strengthen their financial position by actually holding more Bitcoin.
Okay, so it really sounds like Bitcoin isn't just a side thing for them. It's going to be pretty fundamental to their operations and their financial strategy going forward. And this isn't happening in isolation, is it? It feels like it fits a broader trend we're seeing.
Exactly. Yeah, this merger is happening right in the middle of this growing trend of publicly traded companies showing more interest in getting exposure to Bitcoin. Actually, Bitcoin investment firm River pointed out something interesting.
Oh, yeah.
That public companies have actually been accumulating Bitcoin faster than both retail investors and ETFs.
Really? Faster than ETFs, too.
That really signals a pretty significant shift in how, the institutional players are viewing and engaging with Bitcoin. So yeah, this merger isn't in a vacuum like our sources highlighted. It seems to be part of this bigger wave of public companies getting involved with Bitcoin.
Okay, that makes sense. Can you give us some other specific examples, like other companies making big moves here?
Sure, certainly. A notable one is Vivek Ramaswamy's Strive.
Strive, right.
They recently announced they intend to purchase Bitcoin claims tied to the defunct Mt. Gox exchange. Remember that?
Oh, yeah. Mt. Gox. Wow.
And their stated goal is pretty ambitious. They want to acquire a really substantial amount, around 75,000 Bitcoin, possibly at a discount. That's a significant bet on Bitcoin's future value.
75,000 Bitcoin. That's a serious commitment. What about other big players?
Well, we've also seen Strategy, the company that used to be MicroStrategy, continuing its, very aggressive Bitcoin buying strategy.
They're still going hard on that.
Oh, yeah. Just recently, they bought another 7,390 Bitcoin. Cost them about $765 million.
Another $750 million.
Exactly. No, it's worth noting, Strategy has faced some scrutiny. There's a class action lawsuit alleging inaccuracies in how they've represented their Bitcoin investments.
Okay.
So that just highlights, some of the regulatory and investor things that can pop up in this, rapidly evolving area.
Right. So lots of enthusiasm, but also, ongoing oversight and potential bumps in the road. Any other examples of big Bitcoin accumulations by public entities?
Yes, actually. Stablecoin issuer Tether has also been active. They recently purchased nearly $459 million worth of Bitcoin.
Tether did.
Well, on behalf of 21 Capital, a Bitcoin investment firm that Tether backs. And interestingly, 21 Capital is currently waiting to complete a SPAC merger with Cantor Equity Partners.
Ah, the SPAC route.
Yeah, so it just further illustrates the diverse ways companies are finding to get exposure to the Bitcoin market.
Okay, so we're seeing direct buys, strategic plays like the Mt. Gox claims, investments through other firms, SPACs. It really paints a picture of increasing and quite varied ways public companies are getting into Bitcoin. And our sources also mentioned something about Bitcoin open interest hitting a record high. What does that signify exactly?
That's right. Yeah, that news also broke. Bitcoin open interest hit a record high. So this refers to the total value of unsettled futures and options contracts on Bitcoin. A high open interest usually indicates strong market participation. It can suggest investors have a significant amount of capital at stake. Often it points towards, bullish sentiment, although it can also amplify volatility.
Right, more skin in the game, basically. Okay, so let's try and synthesize all this. What are the main takeaways from our deep dive into this KindlyMD merger and these broader trends?
Well, I think the central theme here is clearly the increasing interest and investment in the Bitcoin space, especially involving publicly traded companies. The KindlyMD merger, particularly with the involvement of, a key advisor to a prominent political figure in crypto, is a really significant illustration of this. And it absolutely aligns with this clear trend of corporate Bitcoin adoption. We see it with Strive, Strategy, Tether. These moves, combined with that record-high Bitcoin open interest, well, it suggests a growing confidence, maybe, in Bitcoin's long-term value within the traditional financial landscape.
Okay, so given this increasing involvement of public companies, influential figures, here's a thought for you, the listener, to consider. What might the long-term implications be for, mainstream adoption and maybe regulation of cryptocurrency? And how could this intersection of digital assets with established sectors like healthcare, like we're seeing with KindlyMD, how could that potentially reshape both industries down the road? It's definitely a space to keep a close eye on. Thanks for taking this deep dive with us.